In 1902, 5 businessmen in Two Harbors, Minnesota founded Minnesota Mining and Manufacturing, better known as 3M, to sell corundum to grinding wheel manufacturers. In 1907, future CEO William McKnight joined 3M as a bookkeeper. 3 years later, the plant moved to St. Paul, Minnesota. The board of directors declared a dividend to shareholders in the last quarter of 1916, and 3M hasn't missed a dividend since. The next 2 products 3M developed, Scotch Bend masking tape in 1925 and Scotch Bend telephone tape in 1930, assured its future. In addition to its most notable product, Scotch tape, 3M also makes everything from health information systems to high-tech security gear. Well-known brands include Post-it notes, Scotch Bend fabric protectors, Scotch-Brite scouring pads, and Filtrite home air filters. 3M exhibited an improved operating performance for the fiscal year ended December 2011. The company's revenue stood at $29 billion in 2011 as compared to $26 billion in 2010, representing an increase of 11.6% over the previous year. The improvement in net income can be attributed to strong growth in the company's industrial and transportation segment and healthcare. What the 3M brand is most well known for is its visibility in the consumer office business segment with its product portfolio in packing tape, bubble wrap, glue sticks, and repositional notes like Post-its and office adhesives like Scotch tape. These products generated sales of about $4.2 billion for 2011, which accounted for about 12% of the price estimate of the company. Looking into the customer analysis of 3M in the consumer and office business segment, one of the main motivations for customers buying its products instead of its competitors is the 3M's brand name. The iconic Scotch tape, command hooks, and Post-its are some of 3M's most well-known products and are the products that would first come to mind when considering these different product subcategories. Apart from being high in quality at an affordable price, these products are intuitive and very easy to use. These therefore are some of the factors which contribute to the success of 3M's products in the market. Identifying the unmet needs of 3M is difficult as extensive customer surveys and ethnographic research are needed to justify any openings and niches in the market that can potentially be exploited. However, with 3M's brand leadership in R&D technologies in the home improvement market, they can further expand this segment to home furnishings like window panes and planks for bed frames. What few realize is that healthcare is 3M's second largest division, following their largest division of industrial and transportation goods. Healthcare sales in 2011 accounted for over $5 billion in net sales. There are 2 main major strategic groups in the healthcare industry. These include 3M's direct competition of new medical technology and indirect competition of reuse and remanufacturing medical technology. Major competitors in the new medical technology field consist of Johnson & Johnson, Abbott Laboratories Incorporated, and Fresenius SC & Company, with market shares respectively of 35%, 21%, and 13%. Major competitors in the reuse and remanufacturing medical technology consist of Stryker and BD with minuscule market shares respectively, both around 4%. Both new and remanufactured medical technologies each carry a unique set of characteristics and strengths, along with competitive strengths and weaknesses. New technology covers a vast array of products and services. This variety covers a large span of price points and features to cater to different consumers in different markets. The companies in this category all benefit from economies of scale due to their multi-billion-dollar operations spanning across countries and continents. They have access to deep sums of capital to fund R&D to allow them to stay on the cutting edge. However, weaknesses also roll around these conglomerates. Fierce competition hurts the bottom line and can reduce margins of these products. Due to the medical nature of the products, mistakes in manufacturing or quality control can lead to costly lawsuits and cost the company millions. Reused and remanufactured medical technology has its own set of challenges. This strategic group revolves around technology that was able to be remanufactured or sold again to lengthen its life. These products create tremendous margin due to none of the products being reduced from the R&D costs. However, they target a unique niche of people who cannot afford new technology or have no need for it. Customers can include rural clinics to developing countries. However, these products suffer from inconsistent development and potential quality issues.
Market analysis. Market size. The U.S. healthcare manufacturing sector generated revenues of about $85 billion in 2011. 3M sales as much as 2010 in the healthcare business were reported as $4.5 billion, which accounted for about 18.6% of the company's total revenues. According to Inforum, forecasts the healthcare manufacturing industry will have an annual compound rate growth of about 3% between 2012 and 2015. Industry profitability. Competition, it is high. The industry is highly concentrated. The 50 largest companies account for about 60% of the revenues. Threat of potential entrants. It is low because the barriers of the entry in this industry are high. Threat of substitution. It is low. However, the changes in consumer behavior such as more organic and holistic lifestyle could represent the threat of substitutes for the industry. Bargaining power of suppliers. Low for those selling commodities and high for those suppliers dealing with rare and specialized raw materials. Bargaining power of consumers, which is low. Manufacturers in this sector have the right to decide on prices. One of the reasons has to do with the fact that there are high barriers to entry in this industry. Cost structure. Generally, the industry has high fixed costs due to costly capital investments and operational activities that need a great deal of innovation, skilled labor, and specialized equipment. Distribution channels and market share. Major channels are hospital, which in the U.S. there are over 6,500. Also, there are 750,000 physician's office, dental office, and laboratories, which represent the other major channels. Trends and developments. Specialization. High degree of specialization in the field of rapid innovation allows small companies to compete successfully, but also increase the risk of technological decreases. Consolidation. For achieving shorter product life cycles and reducing the high cost of new technology development. Outsourcing distribution. In a particular, sales and marketing to convince healthcare providers to accept new technologies. And finally, key success factors. Current ones are brand recognition, product quality, introduction of new products, breadth of product line, awareness and recommendation by specialists. Future ones are continue to capture consumer needs, improving their distribution channels. When it comes to environmental analysis, there are several trends related to the healthcare division of 3M. The first being the largest step in technological advances that 3M has been focusing in. There are several important new advancements that 3M is involved in, the most important being the managerial steps in computer assistant technologies. Medical diagnostics have also played a major part in 3M business trends. They have specialized in many fields, but the latest has been the in vitro diagnostics that has been in place. 3M has also been innovative in making procedure trays and kits for the operating room, which allows for faster surgeries and preparation. Their culture is focused on creating innovative and healthcare products. They are also a global leader in distributor, which allows them to be a well-respected company. Their demographics are medium to larger size medical corporations, and they also specialize in many medical fields such as optometry, dental, and surgical equipment and sterilization materials. The regulations which the company keeps is always up to date with current safety and health regulations. They also have a website which the product or trademark code can be entered in for any extra regulations on the product. This creates even more trust in the economy. The economic trends are also pulling on 3M, and they are reflecting the economy with slower growth than usual. 3M is a global corporation which is in over 150 countries and distributes as well as does research in most. Potential threats. The three major companies that form against 3M are Baxter International, Covidien, Dermascience. Opportunities that play a part in this are the fields of osteopathy, veterinarian community, since they have already had it started, and environmentally friendly products. Now for internal analysis. 3M Healthcare is the second largest of 3M's 6 business components. It has been profitable for the past 4 years and consistently has had an operating income percent of around 30%. As the graph shows, 3M Healthcare has been growing for the past few years with a slight dip in between 2008 and 2009, and with substantial growth between 2010 and 2011. Operating income shows a slight growth through the 4 years. 3M is in its entirety, has been profitable with a net profit margin of 14.46% in 2011. 3M's ROA and ROE also show that there's a strong competitor. As the graph shows, return on investment has been consistently above the industry average. 3M had an ROA of 13.55% in 2011. Return on equity has also been above the industry average, even when it dropped 10% between 2008 and 2009. 3M had an ROE of 27.78% in 2011. 3M is a diverse player in the healthcare industry. Their products range from medical care, oral care, stethoscopes, food safety, medical specialists, drug delivery systems, health information systems, and animal care. 3M is able to do this through a few major sustainable competitive advantages. 3M has been able to be profitable in the healthcare industry by having great manufacturing technology, information systems technology, great brand names, a global distribution system, top talent in all operations, and a commitment to innovation through research development, and unfortunately, there's been some challenges 3M faces. These are potential problems 3M may face. They are subject to global market and global economic conditions. As a large corporation, it is hard to move forward quickly when the demand and preferences change. They need to invest a lot in market research to make sure that their offerings appeals to their customers. Forecasting economic conditions and hedging for the worst will help 3M. 3M Healthcare's current strategy is to diversify into all aspects medically. Through acquisitions, 3M plans to globalize their medical research and wants to innovate medicine. They also position themselves at a higher price with a premium quality stance.